traders doing? I will be with you in just a moment. Hey, how you guys doing? Just trying to make some changes here to the visuals and playing around with some different jiffies. Thank you for liking the stream. Appreciate that. Alright, so today we're going to take a look at a basic Thomas Wykoff chart, what that is, and how you can use that as somebody who is an experienced asset trader, or if you're a new asset trader, or if you have no idea what those words even mean. You know, this is all the things, right? So I'm going to start off and tell you that this is not financial advice. I'm not a financial advisor. Everything I say is strictly for educational and entertainment purposes. I'm just, trying to show you guys a little bit about what I know and everything that I'm learning. I'm constantly learning this stuff every day. So by no means am I perfect. I don't think anybody could be in the market perfect, or else, if you were perfect no, there's no way to be perfect in the market. You can't predict what happens. You can only do your best to give yourself the best probability. Okay, but you can give yourself the best probability, and sometimes it still doesn't work out. That's why you have stop losses and different things that can protect your portfolio, right? So the beer of the stream today, I'm gonna go ahead and change that because I forgot to do it. Alright, so the beer of the stream is going to be Samuel Smith's Organic Chocolate Stout. I'm going to turn the light on so you can see that. Samuel Smith's Organic Chocolate Stout. It's a product of the UK. So I try to keep track of my beers here so I know exactly which ones I've done reviews on. I know I did a coffee stream last time, but that's still a brew, right? Coffee's still brewed. So, anyways, this is Samuel Smith's Organic Chocolate Stout. It's brewed by Samuel Smith's Brewery. I just wanted to open with the beer review just to get it out of the way. Usually doesn't take me very long here. And I'm not sure what the ABV is. 1 second, I get on the light here. Oh, 5. For a darker beer, it's pretty surprising that it's only a 5. So the market's looking crazy, like it usually is. We definitely have a little bit more consolidation going on, but that's okay. And I'm talking about the crypto market specifically. You know, I like doing stocks as well, and we can take a look at a couple stocks, but until people start requesting me to look at assets, it's really hard. You know, there's just much more money, I think, to be made in the crypto market right now than there is stock market. So that's why I'm primarily crypto, but I do trade other things, or I would trade other things if I was in that market more, you know. But I will look at assets if you're in a, you know, into stocks instead of crypto or whatever, gold, silver, platinum. I'll check that out, whatever. So we got a 5.0 ABV. I'm just gonna throw a rating up there right now. I'm gonna try this here. I've had it before, but I'm gonna taste it and give you guys a review. Definitely chocolatey. I love that it's organic. It's a very expensive beer. They're like 4 for $10.99. But super tasty even on a hot day if it's real cold. It tastes like a milkshake, like a beer milkshake. It's just delicious. Not too bitter at all. You know, it's just nice and smooth. I'm gonna go with 8.2 on this. And yeah, stout, Samuel Smith's Brewer, Organic Chocolate Stout. All right, we're looking good. So, as you can see, we got Cardano here in the background. I just found this little Jiffy here, and you know, it's definitely the Wrecking Ball, the Miley Cyrus Wrecking Ball, but it's not Miley Cyrus. It's you know, some other person here, but. So Cardano's coming in like a wrecking ball. I just want to talk about that a small bit. So, you know, we have the Bitcoin dominance, which is the dominance of Bitcoin over the rest of the crypto market, right? There's Bitcoin and then there's altcoins. So, you know, with Bitcoin and Ethereum going head to head right now for the dominance market, you know, I think Cardano's swooping right in and proving that it's coming for Ethereum. That's my just hypothetical out there kind of thoughts, you know. We'll see if any of that plays out, but you know, like Ethereum, I noticed that ADA Cardano was down 5% and Ethereum was up 5% today. So are they gonna start playing tug of war? I don't know. Well, maybe not. So we're gonna be talking about classic Wykoff charts today, and how to read them and what that means for an investor. And if you guys have any questions, go ahead and throw them up in the chat. I'm still trying to learn how to use the platform. So just bear with me here, but go ahead and shoot a message, shoot a like, hit that like, that bell, that sub. If you guys have any questions, drop them in the comments. I have my Coinbase link below and my crypto.com link. So that way, if you guys want to go ahead and invest something in the market, if you use my link, we both get some free money. Okay? So we're going to take a look at crypto bubbles. And for the most part, recently... Hold on, we're loading here. Wow, Bitcoin's huge bubble. So as we've been looking at this crypto bubbles lately on the weekly market cap, weekly change on the market cap, we've basically seen Bitcoin and Ethereum and Cardano right here, the three biggest market cap holders of crypto at this time. And you got Solana here that just is up 49.6% on the day, or on the week, I'm sorry. So, when you're talking about why would somebody invest in the crypto market, because you can, if you know what you're doing and you do it properly, you can invest your money and, if you came up 50% on $100, if you started off with $100 and that's all you had, you're like, I'm going to start with 100, I'm not putting another dollar into it, but I'll give it a shot, right? Well, you want to try to get the free couple dollars from whichever exchange you're using, so that's always a benefit. You really don't want to be trading your crypto around a lot, because you're going to be paying high network fees, high exchange rates. You're going to be paying all these different fees and things to send your money. So unless you're making a purchase of a crypto or making a play, even with staking rewards, you want to keep your transactions down. You don't want to try to trade 50 transactions in a day, because all that stuff is going to cost you more money at tax time when you have to pay for your program that does your crypto taxes for you. It costs more depending on how many transactions you use. Now, it's not crazy, and there's different tiers, and you could just buy the unlimited tier for like $189 or whatever, but it goes down from there, and if you're not an active trader, why pay that extra money? So, with that being said, try to keep your transactions down, especially with your staking. Like, if you're going to take a staking claim or a staking reward on one of your cryptos, you don't want to do it every single day to earn one coin or half a coin or a point of a coin, because you're adding up your transactions in your wallet. Now, it's not going to cost you anything to do that now, but even as claiming, I'm sure there's some kind of fees that could come with some claiming your staking rewards. So like if you're claiming a Cardano every couple days, and then you're claiming it every few days instead of letting it build up to like 5 Cardano or 10 Cardano before you claim it, then you're paying that network fee more times. You don't want to do that. And then you're also building up your transactions. You could be trading your transactions instead of just collecting on your transactions. So if you're collecting a small staking reward and you're eating up transaction uses on every trade you make counts as a transaction, then you're gonna have to pay more at the end of the year, up to $189. But you could get it down to like $75, I think, or $60 or something if you get the lowest tier. So, just in a week, Solana has gone from $67.69 down here a week ago, up to $114 in 1 week. It's doubled in value in about a week. In a month, it's up 212%, and for the year, it's up 2,446%. you're just not going to see those types of gains in the stock market as often, you know. And I mean, I was in the stock market for a little while. I did see some great gains, but it's so much. I feel like it's so much harder. I don't know. I'm definitely growing into the stocks more and crypto more. I started off in the stock market. I'd like both, you know. It's good to be in both because not everything is always doing well in either market. So like if the stock market's down, a benefit is you could trade crypto. If the stock market's closed at that time, you could still trade crypto because crypto's 24/7. But if crypto's down and everything's down in crypto, you could trade stocks or gold, you know, whatever, equities. So like there's different things that you could be trading all the time. And that's where I'm trying to get to, is where, you know, I could take a little bit of money here, a little bit of money there, and no matter what, there's going to be a market that's doing well, right? There's going to be something that's doing good, energy or, you know, equities or whatever. There's all these different types of assets on the market, you know. So we're trying to buy, at least what I teach is buy low, sell high. You know, that's what you're trying to buy, the reversal, where it's going down and reverses and now it's going up. We're trying to identify the bottom. So I know I bounced around a little bit there, but I always try to do like an overcap of a couple things in the beginning of the show. I definitely am going to be hitting, you know, what we were talking about, the, where'd it go? How to read Thomas Wykoff chart. We're definitely going to do that. You know, that's next on my list. That's a very important trading tool for anybody out there, you know. I'm glad I get to be very, very, very grateful I get to be with you guys tonight. You know, I have been a little overworked and I've had a few days to unwind and I'm back to work tomorrow. So I'm going to try to get home at reasonable time so I can get to you at least a couple times a week. And as the market begins to change, you know, it's always good to stay up to date with what different assets are doing and everything. That's why I tried to do that Saturday morning farm stream. You know, that was really cool. Just a short stream, just looked at a couple charts, talked about some coffee a little bit, and Susie rode the tractor, you know. So, probably not going to be a super long stream today. I think that Cardano is looking pretty good still. It is selling off a little bit. It looks like we're starting to see an indecision candle, an indecision bullish doji candle. After a bearish engulfing candle, you're seeing indecision near the parabolic trend line that was formed when Cardano took off. So there's like that trend line that we were talking about right here. I'll make it red so you can see it. But there's like that parabolic trend line, 1 touch, 2 touches, 3 touches. And you know, we've broken out of that trend line a little bit here. But as you can see on the way up, Cardano formed kind of like a bull flag here. Kind of got like this bull pole where you got this spring back test and spring again. They call that like a break, hook, and go. So when you did that, you fell into this channel that I've been plotting. And you know, a lot of assets look like this. You know, Ethereum looks like this. I guess most of the research done on this structure, bull pole, bull flag, is done with the bull pole kind of being there, and then the flag usually is consolidating downwards, and then it breaks to the upside. Well, this flag is so strong that it's consolidating upwards. So, the old all-time high you had up at like 247, 249. Looks like 249 was your all-time high on Cardano. Formed. Oh no, 236. Let me see here. Let me zoom in a little bit, guys. Sorry. Okay, so there was a wick high at 249, but your highest candle close of all time was at like 241. And that was about like May 15th-ish. So you guys can see, obviously, this asset is just marked up a whole bunch. You can go over here on TradingView and click on the three lines on the left-hand side, the three lines icon. I don't know, what is it? Yeah, it should show up as three lines at first. But go down to date and price range. I have it highlighted here. And what you could do is you could take your date and price range from your discernible swing low, which is, say, August 9th, to the top at today's price date. And that's the kind of stuff we're looking for, chat. Is, we had this double bottom down here. One bottom. Second bottom with a slightly higher low, okay? One bottom, second bottom, slightly higher low. And that was around $1.98, 99 cents. So you could have got this asset anywhere around $1, and then, from its lowest discernible swing low at the reversal point to where it's at today, which is July 20th to August 31st. So not even a full month. You've gone up 163.92%. So whatever money that you invested, you would have came up 163.92% on that money, whatever that amount was. That's pretty good. In less than 30 days. I don't know. I'd say that looks pretty good. So, what are we looking at today? Well, sorry, it's my eyeballs. I'm tired and whatnot. Today we're looking at this channel on ADA. So we are at about 45.82 on the RSI, and we have a pretty wide neutral zone between 59 and 41 on the RSI, which we're still in the neutral zone. It looks like we could be forming a reversal here right now, as the seller momentum begins to wane. You had some hidden bullish divergence here playing out from this, some triple hidden bullish divergence here, where you're making stronger levels of negative price action on 3 histogram islands. And then we were here talking about that on stream, and it marked up in value, and even though it did not make a higher high, it is still locally making higher lows. Right now, if you zoom in, you're gonna see that we're having this indecision doji candle, and it broke above the channel, fell back into the channel, broke below the channel, broke back into the channel. It does this because it's trying to stop out people who have stop losses. If you have a stop loss at this high at like $1.89, $1.90, well, it came out and it stopped you out down here with this scam wick, and then it took off again. What that is that's like, there's bot trading, there's so many different types of traders in the market, so these levels get identified, and for it to run to new levels, a lot of times it runs through, it hits everybody out of their stop loss, and then it takes off. Okay, so that's one reason. That's like one of the few reasons that stop losses can be an issue if you're not paying attention to your chart. Okay, but other than that, they're more like a safety net. They're to save your money, not to hurt you. But people and programs can figure that stuff out, and then it'll stop you out real quick, and you got to buy back in order to get the positive price action that you were looking for before this asset. I mean, look at this major, huge, giant, enormous bullish engulfing candle on August 19th, 2021. Just beautiful. So I think we could maybe see a reaction here. It looks like you could be possibly getting ready to react at this trend line, this channel, channel line, but I'm not sure. It could fall below the channel and then react and pop back into the channel, just like it did on August 18th to August 19th. Pretty much in a day, it fell below this channel, made a double bottom, a higher low consecutively, and or I'm higher low locally, and then ran back up into the channel. Then you got this giant bullish engulfing candle here. So there's really no, just keep an eye on it. These are the kind of structures that we're looking for. And one way to play these channels, we were talking about the other day on Saturday, is you could always buy if one wanted to make a trade, one could buy the bottom of the channel and then take profit at the top of the channel, buy the bottom of the channel, take profit at the top of the channel, buy the bottom. It's called channel trading. It's its own thing. So but yeah, I think Cardano, even though it's selling off a little bit, you're still making a higher low than August 27th, which is the most discernible swing low locally. And you really definitely want to stay above the old high at August 22nd at like 264. As long as you stay up, if you fall below in the channel, as long as you get back up into it, you should be fine. We could have another scam wick where it comes down just to knock people out of their trade, right? And then just maybe consolidates a little and then breaks back up into the channel, and then maybe test the spring, and we might get another bullish engulfing candle. Who knows? Or it could sell off to the downside, and we could create a whole new pattern. This is where the RSI and these things come into play, because you're taking your chart trading, your pattern that you're trying to trade with, or that you've drawn, or that you've confirmed, or whatever pattern that you're using with your RSI, your relative strength index, and your MACD, and you're using those, and you know, you're trying to play the best odds that you can. Okay. Now, this isn't like gambling in the casino. These are investments. So you're putting your money in and you're waiting until your money has made you a return. Positive return. You know, you're not gonna try to put your money in and lose it, right? So you're putting it in, you're being patient, you're using proper you know, position sizing, and just making sure you're buying that bottom, right? So we're gonna talk about classic Wykoff accumulation. I know it just got bright. Let me see what this looks like. I'm trying to fix this, guys. Hold on. It's awfully... ginormous. Alright. So, we're looking at Wykoff logic, and Wykoff, his name is Thomas Wykoff, okay? He wrote a lot of books. Maybe check out his books. They're worth a read. I've been dabbling in a few other people's books right now and haven't been able to get myself over there yet, but I have learned a lot of information about the Wykoff accumulation structure. And this is a very good way to look at it. Of course, it doesn't want to give me a big screen on that, but so if I take hold on, I'm trying to get you guys a really good chart that's easy to see and read. I don't want to, some of them go along with other readings or whatever, so I don't want to. Okay, so a lot of times, you know, on stream we talk about like the spring back test of the spring. That's a Wykoff pattern, and sweet, there we go. That's a Wykoff pattern, and what you're looking for is, okay, there's an accumulation phase, okay, then you have the breakout right here, that leg, and then this is the spring, back test to spring. So accumulation is where you're going to find your double bottom, and usually you want to find your lowest low of the most, you know, out of all of the most discernible swing lows and swing highs near the chart. You know, you want to be at your lowest low. And how do you know if you're at your lowest low? When you are reversing on the MACD and the RSI, and you've made your all-time low for, or the all-time low for that time. And so, because you know, you might run up on a chart and make a higher low, but still have another double bottom. So as the accumulation and the consolidation happens over time, you're going to make higher lows, even if you have your markdowns, you know. So you're looking for this double bottom, and then you're going to have a spring and a back test to spring. So that's where you're going to spring past your first targets, or your you know, your first inflection point, and then you're going to back test that inflection point before marking up to higher prices. Then you have the reaccumulation phase, where, you know, more market participants own the asset than before at these prices, and usually you can see another, not every time, but you could see another markup from the reaccumulation if that were to play out, okay? Now you could sell off here and go to retest this accumulation high again, or your breakout high. You could come back down and test this high here. This would be your new back test line if you were to fall down. And as long as you made a higher low consecutively here, then the throwback price, as long as you made a higher low from the spring to the throwback, and from the throwback to the reaccumulation, and from the accumulation, you want to locally make higher lows and before you're going to get marked up, where you could see like a potential double top, or the opposite of what we're looking for at the bottom, where one would maybe take a short or a put. I'm really big on trying to teach how to make passive income with crypto, because I just really think it's great that you can make money without having to actively do something after you get yourself set up. It's not like, you're going to retire from it tomorrow, but it is passive money, So I try to teach this, the basic chart readings, because I want you guys to understand where you are in a market cycle, right? So if we look at the accumulation, the spring, breakout, throwback, markup, reaccumulation, and the correction phase, you could take there's different depictions of Wykoff accumulation, and they're all just different examples over time, but they're all pretty much like accumulation, reaccumulation, markup, distribution phase. Okay, what does that mean? Well, when you're accumulating, your supply to your demand is minimalizing. You're having less or more demand and less supply, and because of that, it's driving the price up. Now, that's why we're big on tokenomics here at Crypto Construction, because when we're talking about tokenomics, you're talking about like the max circulating supply, different characteristics of assets that may dictate where they're going to be in the future, simply on the amount of supply that the asset has, how new it is to the market, what its utility is, which blockchains it runs on. There's a lot of different things we look at here. But basically this Wykoff accumulation, it's an older trading strategy, and it's just Bitcoin, internet computer protocol. Like we can point that out right here, So if I zoom out on this chart a little bit, whoa, what happened? Okay, so, this is internet computer protocol. If you were to type it up in the symbol search up here, this is ICP USD, and I'm looking at it on Coinbase. So the reason why I was very specific on that is because some assets may differ in price depending on which exchange they're held on. So as you can see, this asset had an ICO or an IPO where it came out and had this huge markup and then an immediate sell-off. Okay, that happens a lot. You really don't. You got to watch with these, initial coin offerings and initial private offerings. You just got to be careful, okay? I'm not going to really get into too much of those. That's not something I participate in currently. But once you reach like down here at this level, okay, this is where Wykoff method starts to make sense. All right. So you had this huge, 126 high, $126 is like between 126 and 135. Okay, you had this high, and then your next highest high with, because there's two tops there is probably where you'd see it go, $166. And your next highest high, maybe up here at like, I don't know, like 189. After that, there's nothing till 340, 338, 340, 338. All right, so when you're looking at this asset, it's been marked down from, 480, 520. It's up there, dollars per share. If you look at, or per coin, if you look at this asset on some of the other exchanges, Poloniex, it paints a totally different picture, right? So let's take a look at that. We'll just check it on Binance. Okay, so like if you look at it on Binance, it had a high of, it was a wick high, it was really huge, but the high was like almost $3,000. Okay, that it sold off from, and it's literally just been in the accumulation phase this whole time, which is really cool. I didn't even check that out on Binance. I know Farm Token is very similar, how it's got like different time scales on different exchanges, but Internet Computer Protocol really is, in my belief, in the accumulation phase of the Wykoff structure. Okay, you're gonna have the smaller candles, the more indecision doji candles, a lot of long chop between prices, not going very high or very low. That means people are buying up the supply. Okay, that's what that means. So if you go over here and you see the accumulation phase, what's next? Markup phase. Then what? Reaccumulation. Then what? Distribution. So as the asset is bought up, the supply is consumed because people are buying it, right? It's owned. So when those people start to buy up the asset and the asset runs out of supply, a lot of times the demand can go up. And if the demand goes up, it's going to drive the price even higher. Now, sorry, I got a gnat flying around my beard. But what happens at the distribution level is that at the distribution level, you are selling off, or you maybe you're not, maybe you're a long-term holder, but investors are selling off up here at the distribution phase. They are selling off some of their profits, right? They're taking some profits, and it's usually when you can see like bears take control, and you continue the distribution, and when you're at the bottom of the distribution phase, you come to the accumulation phase. So eventually it'll double bottom, you make a higher low than before, in history, and then you're in the accumulation phase again. And then you go through a reaccumulation phase, and then another markup, and then you're at the distribution phase. It's a repeating cycle. During that repetition of cycle is where you form like harmonics and other things that we talk about on this stream. So Thomas Wykoff, probably a very good gentleman to read about, and check out his chart. It's this is why people don't understand and get scared of charts, because they don't know how to read them. But if you knew that like a bunch of these little candles that are in a bunch here, and then here, and then, you know what I mean, like that, these point you in the right direction to investing in yourself and learning what the charts are doing, which stage it's in. So there's different phases. So if you realize that you're in a distribution phase and you bought in an accumulation phase, maybe it's time for you to take profit. Maybe not. Maybe the asset distributes some, sells off a little. See this channel right here, this distribution channel? If you just painted that downward a little bit, now you got a bull pole, bull flag, you know? Now, if you had a upwards sloping distribution phase, that's not a distribution phase, is it? No, because it's not distributing. You're making higher and higher prices as you go up. So the asset is just being owned by more, investors than before. So Thomas Wykoff helps break it down, pretty well. I like this one, Wykoff logic. So you got low sell volume, failed sell off, and then you're gonna have your spring, back test to spring, or some people call it jumping the creek, the back test. Then you're gonna have the markup, okay? Major markup, you get your buying climax, which is your high, your major high, discernible swing high. Then you're maybe gonna sell off, make a lower high, and a higher low, maybe make a little chop. You're going to make another rally and make a lower high than the buying climax, and then come down, back test. See how this distribution right here, this pattern, break the ice, is the opposite of jump the creek? This accumulation pattern is this distribution pattern flipped upside down. So that's why you can play the bearish market or the bullish market. Makes sense? So Wykoff distribution, Wykoff logic is very important for bullish traders and bearish traders. This is something that if you were able to take some of the information that I'm teaching you and learn it at a bottom, because that's how I teach it, you could use it at a top to play the market short if you really wanted to. I want to take a quick look at farm, and we took a look at 88. Oh, look at this. We're getting a bullish engulfing candle starting to play out. Oh, no. I'm sorry. It's still just a doji. Could be a bullish hammer. I thought it was a little higher. Sorry, I got excited. But yeah, it's just like a bullish doji. It could be a bullish engulfing candle if it fully engulfs the previous red candle, right? Which it doesn't have to. It did come down, and it just scam wicked past. It keeps teasing, but it did scam wick a little bit past the channel trend line that we have there. So, like I said, it may or may not try to break out and break back in. It could fall below it and make a new pattern, or it simply could just scam out some wicks real quick and then run to the top of the channel or the heart line of the channel. So this is a hyper uptrend, hyper bull trend, where you're in a channel and you're running in the channel, but you're also making consecutive higher lows as you're building the channel. That's like a hyper uptrend bullish channel. So let's take a look at farm real quick, and then I'm probably gonna get out of here. All right, so farm token, we drew this structure together a couple days ago. I think it was probably on like August 15th or so. I forget which day my stream was, but we were somewhere over here talking about this asset, and as we talked about it for like maybe 10 days or so, it was marked down, and that's okay because I bought on the way down. There's a very, very, very low supply of this asset, and I bought it for different reasons than just the chart. I mean, I looked at the chart for sure. I was all over this chart, but there were some other reasons why my trade was a little more risky on this because of the my tokenomics and what I was investing, the amount at such high levels, but I'm very, very confident in the tokenomics of this asset, and I think it's very, very new. There's not a whole lot on the chart to go off of as far as it's done the same thing in history over and over again, once, twice, three times, maybe about to do the fourth time. So, and it's very nice upsloping consolidation with 1, 2, 3, 4, 5 higher lows consecutively, breaking below the channel, busting back into the channel. It'd be nice to get up in this heartline area, but for right now, we're still in the bottom of the channel. So, because we fell out, made this double bottom locally, and then had this huge markup, we're back in the channel. So even at the bottom of this channel, guys, I think it's still probably like 256 to 280, 290. I think it's still a pretty decent investment on this. Be aware it could sell off. It could come down and test one of these old highs down here. That's what this did. It came up, made a higher high, new higher high, sold off a little bit, came down to test the old high at like $215. I made this low at 212 and then like 215, a little bit higher low, and it ran up again. And what's happening is, as this asset is being marked down in price consecutively, more market participants are owning it each time that it sells off. So it sells off some, and that makes sense, right? Because it's being distributed and then it's being bought back up. But when it's being bought back up, there's more people who are buying it back up than before. So, say there was 100 people who bought, these are hypothetical numbers, but like 100 people bought it and it was marked up, and then it's sold off, and now there's only 50 people. When it gets bought up again, 200 people own it. It keeps, more people are owning it than before, and that's the reason why I'm super bullish on this asset, because it's only got a max supply of, about 690,000 or 680,000 coins. And so, as long as more people hold the coin, the next time it sells off and they don't sell it, it's going to keep making higher lows. And there's only 600,000 coins. So that's my thoughts on that, guys. We took a look at classic Wykoff accumulation. If you have any questions about that, drop them in the comments below. Please hit that like, that bell, that sub. And, anytime you want to request a specific chart, or you want me to look in the tokenomics or something, or if you have questions about a wallet or any of that, please, feel free to pop in the chat and ask me some questions. And until I get too busy, I'm free to open, and I'm free to open and answer any kind of questions you guys have. So, I'm full of information. I just don't always know what to talk about. I don't know what you guys already know. I know that, a few of the people I watch ask me to talk about certain things, but I'm trying to get new viewers in. So if you're a new viewer, you've never seen this channel before, please just help support the channel, hit the like, and share my stuff, ask me questions, tell your friends. Let's talk about gold, let's talk about silver, let's talk about Apple, let's talk about Google, let's talk about Tesla, let's talk about cryptos. What do you want to talk about? Let's talk. That's what I'm here for. So I'll see you guys later. Peace out. And I'm going to slap up the crypto bubbles here, and I will be seeing you later.